Good morning, everybody. You are watching a live daily market outlook from Windsor Brokers for Monday, 25th of February 2012. The week starts with a lot of action in the markets, more or less expected things, especially regarding the sterling's fall and gap lower opening that was triggered on late last Friday's action of Moody's that surprisingly downgraded the domestic and the foreign currency government bond ratings of the United Kingdom by one notch from AAA and the negative outlook to AA1 stable outlook. Moody's justification for the downgrade is difficult to argue with, as the press release highlighted the three interrelated drivers to the downgrade. They are as follows: the continuing weakness in the UK's medium term growth outlook, the medium-term growth prospects posed to the government, fiscal consolidation that will now extend well into the next Parliament, where the Moody's expects the UK gross general government debt level to peak at just over 96% of GDP in 2016, and the deterioration in the shock-absorbing capacity of the government balance sheet. Moody believes that mounting debt levels in the low-growth environment have impaired the UK's ability to contain and quickly reverse the impact of adverse economic or financial shocks. As a result, this was widely expected and commented basically during the weekend. That slide that was triggered on Moody's announcement last Friday on the cable will of course result in the gap lower opening that basically happened at the beginning of the week, and the cable dipped as low as 150.69. Some recovery was seen during the Asian session, but still strong downside pressure still sees the 150 as psychological support, firmly in play and in the near term focus. Also, other important thing that is basically seen as a driver for a single currency is the elections in Italy. Today is the second day, and Italy heads to the polls to vote in the general elections called 2 months before the end of the statutory 5-year term. The outcome is so far rather uncertain, as many voters remain undecided as to who to choose. Before the opinion polls blackout on February 8th, surveys show that the left-center party has had the most support, with also the parliamentary elections in Italy seen as today's result. Of course, an announcement will be the main driver for the single currency. From the other side, the Japanese yen jumped higher, strong over 100 pips gap higher opening resulted in the fresh 22 months high at 94.55, brief break above near-term range that was established between 92 and 94.45. Now threatens extension towards our near-term target at 94.97, which is the May 2010 high, with the brief consolidation seen above 94, now offering good support, likely preceding the fresh rally. The yen's weakness against the dollar is a speculation. It was triggered as speculation strengthened that the Japanese government is set to name 2 strong supporters of aggressive monetary easing to the top posts at the central bank. And Tokyo is planning to nominate Haruhiko Kuroda, a vocal advocate of aggressive monetary expansion, as Bank of Japan Governor Iwata, an academic who has criticized the central bank for not taking bold measures to fight deflation. As one of the 2 deputy governors, comments say that Kuroda is a fan of weaker yen and of deflation bashing, and the Iwata is leading anti-Bank of Japan academic, and his appointment was the shock prompting aggressive yen selling by foreign speculators. As said, the yen continues to weaken as a fresh high has been established, and the most likely extension higher is seen as a likely scenario. From the other side, the weaker dollar pushed slightly commodities higher. The gold remains in its near-term recovery mode of recent low posted at 1554 on 21st of February. Now brief break above the consolidation in past 3 days since during the last week between 1586 and 1569 sees potential for a gain of 1600. This is seen as initial target as psychological and Fibonacci resistance that might prevent immediate downside risk and see for some open way for some stronger recovery, despite the overall trend is still quite negative, while the crude oil remains within the narrow range, consolidating heavy losses in last week when the oil price dipped from initial 98.62 and then the lower top at 97.47 as low as 92.43. This was last Friday's low, turning the near-term focus towards the downside as the recent fall triggered by completion of the swing failure technical outlook break below the 95 zone as the initial support, and the base now sees more potential for a stronger recovery over 38.2% of 84.05 to 98.63 seen so far. So most likely we'll be looking for some stronger corrective action in the near term of the oil price. From today's calendar, not many events, rather speakers than events. We have to mention that Chinese flash manufacturing PMI for February came in disappointing 50.4, lower than expected and lower than the previous release. 52.2 was the forecast, 52.3 was January's release, and this is all from the releases. We have as a top one of the top events today, Italian elections. Mortgage approvals from UK are due at 9:30 GMT, and then we have two speakers, German Bundesbank President Widmann, who is due at 15:30 GMT, and the Bank of Canada Governor Carney, that is due to speak at 17:15 GMT, and that's all from today's calendar. But still, quite important events, especially the Italian elections, are the focus for today, and most likely will be the one of the main drivers of the single currency. And since we are mentioning a single currency, we're going to take a look at technicals to see the latest movements and expectations for the coming day. Meantime, you can think and prepare your questions that you can submit at the end of the session. Starting with the single currency, I believe you see the screen chart on your screens, though my screen is still showing that you see the calendar. Anyway, I'm going to start with Euro. As said, the consolidative mode is seen in past couple of sessions with the downside having base at 131.44. This is last Friday's low, and the upside Friday's high at 132.43, with the slight improvement seen in the hourly structure on attempt to the upper boundary of this range that is also close to 38.2% retracement of the entire down leg from 134.30 20th of February high to 131.44 last Friday's low. Still a lot work required to improve the current structure, as single currency, as we can see on the 4-hour chart, remains in the strong downtrend and continues to channel lower, and basically the current move is seen as just a corrective action as long as we stay below initial and strong resistance, which is at 133. This is previous resistance, and it's approximately slightly above 50% retracement of the down leg from 134.30 to 131.44. Regain of 133 is seen as a boost for the single currency to trigger some stronger recovery. But again, based on the 4-hour outlook, we need to see break above 134, 134.30 in order to confirm the major reversal of the larger down move from 137.10 that dipped so far to 131.44. The later is the previous peaks of 20th of February, 134.30 and 134.33, along with the 50% retracement of the entire move are seen as a trigger for some stronger corrective action. Otherwise, anything below these levels would be just seen as a corrective rally and then preceding a fresh weakness. Other supportive moment for the single currencies, Doji candle that appeared on last Friday's trading that signals outside currently the investors are not very sure in decision basically in what to do next, as the quite significant fall of single currency from recent peak at 137.10 has retraced below 50% of entire 126.60 to 137.10 rally, with the 90 days moving average so far containing dips, but still a negative tone that dominates on the daily chart with indicators now below their midlines, signaling that the possibility of further extension is quite high as long as we are holding below initial 133.00 and a more significant 134.30 barrier, again of which is, as I said, required to shift focus towards the upper boundaries. Initially we have the two trend lines. The lower one is the main bear trend, main bull trend line drawn of pardon, we are not very accurate with the trend lines. Let's just make it this way. The lower one is the main bull trend line drawn of 120.42. This is the low of 2012 posted in July through 126.60. We're back to the daily chart that will show and has been dented on the recent break higher. The other one is trend line, bull trend line of 126.60 and is currently at 133.26. Basically regain of 133, and this trend line will be good signal. These are broken trend lines. Would be good signal for some stronger recovery. Otherwise, a negative scenario is still in play. As I said, the daily structure is still negative, and from Ichimoku studies, daily cloud the top has so far offered good support, showing that the pair did not manage to crack it more significantly, and this is acting now as a good support for a possible basing attempt. Of course, requirements are regain of 133 as a minimum, and then more significant levels at 134 zone in order to confirm. So far we have good support of cloud, which is currently at 132, and this is seen as initial support ahead of the low of last Friday at 131.44, and slightly below this we have 131.32 and 90 days moving average. Losing these levels would signal a resumption of the near-term bears of 137.10, and we'll look for 131 as psychological support, and then 61.8% retracement of 126.60 to 137.10 ascent. British pound, as said, remains under pressure. Some recovery seen at the beginning of the day. Asian session opened with a stronger gap lower, dipped as low as 150.69, and now we are in attempt to recover. Basically, initial attempt is seen for filling this gap in order to trigger some stronger recovery of the recent slide from last Friday's high at 153.15. Ending of the day was announcement of the downgrade of UK by Moody's, and then gap lower opening, dipping as low as 150.69. Now the 151.63, 38.2% retracement has been regained so far. Friday's closing price is at 151.90. This is quite a strong barrier, as we have the descending 20 days exponential moving average and the 50% of the entire down move, and it's seen as a break point. So if we see the break above 152, then immediate bears would be sidelined in favor of some stronger recovery. However, a break above 153 zone, 153.15, double top of last Friday, are seen as a requirement for some stronger corrective action. We have these levels 153.19, 153.15. Basically, this is seen as a minimum requirement to prevent immediate negative scenario of falling down to 150.00 psychological support, and our near-term target Holding below 153 zone is still seeing risk of a lower top and a fresh extension lower as the pair remains in a strong downtrend from 163.80. This is the peak of 2nd of January 2013, pardon, and this is also the yearly peak, and extending below 50% of the larger move from, we have to open the monthly chart, from 135.01, this is the low of 2009, up to 170.41, peak of 2009 in August. Break below initially range floor at 152.33, and then break below the also 50% retracement sees potential for further slide. As said, we have the we had quite negative bearish signals on the break below these important barrier supports, and the break test of 150.00 as psychological support is seen as a quite likely near-term scenario. Of course, while we hold below 153, otherwise a regain of 153.15 recent peaks would be a signal for some more significant corrective action. But as I said, larger pictures down move is still firmly in play. Bears are firmly in play, and they do not see much of recovery for now. From Ichimoku studies, also bearish signal was seen on the break below monthly cloud base at around 152.67. This is again equivalent to the previous multi-year range floor that was limited on the downside by 152.36, the area, and this is giving basically another bearish signal. On the daily, Ichimoku studies are firmly bearish and show downside firmly in focus. Tenkan Sen line is at 153.78 so far from current market levels. This with a regain of this level would be seen as initial recovery target. Until then, we still see focus more towards the downside. The 4-hour Ichimoku is also very bearish, and the Tenkan Sen line is approximately at 152, along with the last Friday's closing price and the 50% retracement, reinforcing the current stronger resistance that we see as a minimum requirement for some stronger recovery. Though both moving averages of Ichimoku are now moving sideways, that could be initial signal. Of course, a lot of work required. The regain of Tenkan Sen is initial, and then Kijun Sen that is currently at 152.86 to give initial signals for some stronger recovery according to the Ichimoku studies. Another top performer of the beginning of the week is dollar yen, strong gap higher opening triggered by comments of new heads of Bank of Japan. Last Friday's closing price was at 94.24, and the overnight's opening was at 94.55. We're talking about 120 pips gap higher opening, peaking at 94.55. Keep showing that bulls are again returning into play. Subsequent pullback so far was held up at 94. This is seen as initial support, with the hourly studies still holding the positive tone, but current reversal and renewed attempt higher, failure to significantly move higher and basically to break above again previous range top at 94.45. 44.45 sees that potentially the corrective action could precede fresh strength. From the downside, the supports, as said, 94.00 is the initial one, and then we have 93.87, 38.2% Fibonacci retracement of the uplift from 92.76. This is the latest rally from last Thursday to overnight's high at 94.55, and then 50% at 93.66. The main danger will be seen on filling the gap and regaining levels of last Friday closing, which is around the 93. 30-40 zone. This coincides also with 61.8% Fibonacci retracement, and basically this will be a signal that false break has occurred on overnight's gap higher and rally to fresh higher 94.55, and bring basically the price back into the range. On the daily, quite overextended conditions. and the descending indicators, all descending from their peaks, did not result so far in any stronger pullback as the pair jumped higher. However, this was mainly driven by fundamentals, so we need to leave the technicals to do their job. As still a negative tone that is seen in the daily chart still sees potential for some stronger reversal, as we can see that most of indicators are in descending mode and pointing lower. On the near term, the 4-hour indicators are still in rather neutral tone and they show no clear direction at this point, despite the current dent of range top at 94.45, while hourlies are now reversing from the overbought territory on the current pullback from 94.55 to so far 94.00. Overall, we are still in the strong uptrend as shown on the larger time frame. If we put it on the weekly, then we'll see that this strong uptrend is still unobstructed and still shows no signs of fatigue, despite quite overextended conditions on weekly overbought conditions. Basically break below 94 as initial support and the return down to the levels, as we said, around 93.40 would signal that the pair is back into the range. However, the main support and key support of the near term is 92, which is the higher base floor, and the only break below this level would be a signal for some stronger reversal, and stronger reversal of the longer term rally that commenced from 77.12. This is the low of September 2012, and so far showed no more significant corrective action. This basically is the first one that is seen as a larger consolidation, but current jump higher again sees potential for a possible extension towards our near-term target at 94.97. I think we have to go to the monthly chart to see it. 94.97 is the peak of May 2010, and this is acting as our initial upside target for dollar yen. From the other side, the dollar Swiss near-term bulls are running out of the steam, as shown on the hourly chart. A brief break below the recent consolidation range floor at 92.80, spiking down to 92.73, sees potential for some stronger corrective action of the larger recovery from 90.20 low of 1st of February 2013 that so far peaked at 93.32. Initially, the failure to hold gains above 93, that also marks 76.4% Fibonacci retracement of the down move from 93.87 to 90.20. Might signal some corrective action. However, the overbought positive 4-hour conditions still keep the upside favor, despite now descending MACD and RSI. That may allow the correction down towards initial 92.50 previous range floor, while a break below 92 that marks previous 50% of the down leg from 93.87 to 90.20, and a higher low of 20th of February at 91.82 could be quite harmful for the pair, and this would be initial signal of a possible stronger reversal. We can see it on the reverse 4-hour Fibonacci said that we have around 92 zone, we have 38.2%, and then 91.76 is close to is 50% retracement, and it's close to recent low at 91.82. Basically, break below 92.50 is the will be seen as initial signal of a stronger correction that requires confirmation on the break below 91.80, 91.76, also 50%. That will sideline near-term bulls and prevent a pair for possible test of our initial upside targets, 93.81 and then 93.87 peaks of December 2012, January 2013. Daily structure is still positive and still sees scope for a possible further extension higher, with the downside support at 92.56, which is the previous range top, being reinforced by 92.67 90 days moving average, still keeping the bulls in play as long as we are holding above 92.00 and then 91.80. And from commodities, we're going to take a quick look. Crude oil, as said, is in a brief consolidative action following sharp fall from recent peak at 98.63, 13th of February high. That retraced between 38 and 50% of initial 85.20 to 98.63 rally. Break below the channel support, and the more significant 95 base has accelerated losses, and dip so far to 92.43, with the outlook in the near term as seen still negative. That confirms the break of the daily indicators below their midlines. 4-hour structure is indicators are emerging from the oversold territory. Could be a signal for some recovery action. We have immediate barrier at 94 round figure, 20 days exponential moving average, and 23.6% retracement approximately of the down leg from 98.63 to 92.43, and then more significant is 95 zone. This is above 38.2% retracement, and basically if we see regain of this level, then a more positive tone would be established on the oil's price action. Otherwise, lower top and fresh slide lower as a part of the larger corrective action of 85.20 to 98.63 would be quite a likely scenario. A quick look at, let me just find them, quite difficult to find. Okay. Ichimoku studies, again we have similar situation like with the sterling. The daily cloud top at currently 92.40 is now offering support, and this could be initial signal, could be additional support for initial basing attempt of last week's fresh lows at 92.43, with the bounce higher again, as we said, requiring a regain of strong barrier, previous strong support at 95.00 in order to signal, confirm the basing attempt and allow for some stronger recovery. Otherwise, penetration through the cloud would risk reversal down to 92.00, which is 50% retracement, below which bears would take more control, and then below this we have the 200 days moving average at 90.46. The support, the notion of recovery and the basing is still supported by double golden cross shown on the daily chart, where the 55 days and 90 days moving average is crossed above 200 days one, and this could be still seen. This is still seen as quite a good support on the downside. However, the price briefly broke below 55 days moving average. That is currently around 93.40, and now attempting to break above it. That will be initial supportive signal for some stronger recovery, but again regain of 95.00 is seen as a minimum requirement in order to signal some improvement in the near-term oil price action. And finally, yellow metal. A brief recovery is still underway of 15.54, triggered by broader dollar weakness, and we are looking for a level on the upside to improve. 15.85 has already been regained. 1600 now. We are approaching 1600 psychological support, and this is approximately 38.2% retracement of the latest downlook from 16.83 down to 15.54. On the larger picture, I wanted to show that critical support at 15.20 zone. This is multi-year range floor is still in play as the price approached this level by dipping to 15.54, and still negative tone seen, though overextended conditions and the reversal of daily indicators sees good potential for basing attempt and preventing basically the yellow metals price of sliding towards critical support. As set on the downside, on the upside, a regain of 1600 as initial barrier, and then 1625 a previous low could be initial signal for some stronger recovery. Also, this is close to the previous lows, close to 1619, 50% retracement. That will signal basing attempt at 1554 and allow for some stronger recovery. For our structure is all indicators are pointing higher and seeing room for some extension, more extension higher with 1600 barriers in reinforced by 55 days exponential moving average currently at 1606 with break above 1620.25 seen as the confirmation of the near-term recovery and the possible extension up towards 1635 and then 1650 next strong resistance. That was all from my side for today. If you have any questions, any comments, please you can submit them in written, and then I will answer to you. If you want to see any other instrument or any comments, questions, please feel free to submit your question. It seems that we don't have questions. I would like to welcome, I see some new names, first time with us. I would like to welcome all of you that are newcomers, and I believe and hope that our services would be good enough for you to start the day with our comments and analysis. Also, if you are a client of Windsor Brokers, then you can find a number of analysis for other instruments, especially for the commodities, crosses, and the major currencies. You can find them on your trading platform, updated regularly on a daily, twice a day basis. And also, if you have any comments, any suggestions, you can also send me an email. You can see on your screen the contact address is analysis@windsorbrokersltd.com, and me and my team will be happy to assist in any issue and any problem or any comment that you would like to hear from us. Since we don't have questions for today, I would like to thank you and conclude this session. We are back again tomorrow morning at the same time. Also, if you miss any part or if you are unable to attend the live session shortly after the end of the session, recorded version will be loaded in the YouTube. Our page is called the Windsor Brokers Forex, and you can find it also there in case of for any reason you miss the live session. I would like to see you again tomorrow morning. We're back at regular time, 8 o'clock GMT. Until then, I wish you nice Monday, nice beginning of the week, and of course, the most important, successful and profitable trading. Good luck.